The housing market is about to face its biggest test in years, and while some states are bracing for impact, others are sitting pretty with built-in shock absorbers that could make all the difference. If you're thinking about buying, selling, or investing in real estate, the next few minutes could save you from making a costly mistake or help you capitalize on the opportunity of a lifetime. I've analyzed economic data, housing trends, and market indicators across all 50 states to identify which ones have the best chance of weathering the storm that's brewing for 2025. What I found might surprise you, because the states everyone thinks are bulletproof might actually be the most vulnerable, while some unexpected winners are flying under the radar. Before we dive into the specific states, let's talk about what makes a housing market resilient in the first place. It's not just about having expensive homes or being in a trendy location. True resilience comes from a combination of factors that create a perfect storm of stability. First, economic diversification is crucial. States that rely heavily on a single industry are playing with fire. When that industry takes a hit, the entire housing market can collapse like a house of cards. Think about what happened to oil-dependent states in previous downturns, or tech-heavy markets during the dot-com crash. Second, population growth trends matter more than most people realize. States experiencing steady, sustainable population growth have consistent housing demand that acts as a buffer against market volatility. But here's the catch. It needs to be the right kind of growth, not just people fleeing high-tax states temporarily. Third, affordability ratios play a huge role. States where median home prices haven't completely disconnected from median incomes have more room to absorb shocks. When homes cost 15 times the average salary, there's nowhere to go but down. Employment diversity and job market strength form the foundation of housing resilience. States with multiple thriving industries, growing job markets, and low unemployment rates can maintain housing demand even when other economic sectors struggle. Now let's reveal the states that are positioned to be the most resilient in 2025, starting with some surprising winners that most people aren't talking about. Texas continues to dominate the resilience conversation, but not for the reasons you might think. Yes, it has no state income tax and business-friendly policies, but the real magic is in its economic diversity. From tech in Austin to energy in Houston, aerospace in Dallas, and agriculture throughout rural areas, Texas doesn't put all its eggs in one basket. The state's population growth remains strong, driven by both domestic migration and international immigration, creating sustained housing demand across multiple price points. But here's what's really interesting about Texas. Its housing market never reached the extreme valuations we've seen in coastal markets. Cities like San Antonio, Fort Worth, and even parts of Houston still offer reasonable price-to-income ratios, giving the market room to absorb economic shocks without catastrophic price collapses. Florida is another powerhouse, but with important nuances. The state's appeal goes beyond just retirees and vacation homes. Florida has built a legitimate tech sector, maintains a strong tourism industry, and benefits from significant international investment. The lack of state income tax continues to attract high earners from expensive northern states, creating a steady stream of cash buyers who aren't dependent on financing. However, Florida's resilience comes with geographic variations. South Florida markets like Miami might be more vulnerable due to extreme price appreciation, while Central Florida cities like Tampa and Orlando offer better value propositions and more diverse economic bases. North Carolina emerges as a dark horse candidate for housing market resilience. The Research Triangle area has created a legitimate tech and biotech hub, while Charlotte has established itself as a major financial center. The state offers a compelling combination of job growth, reasonable housing costs, and quality of life that continues to attract both businesses and residents. What makes North Carolina particularly interesting is its balanced approach to growth. Unlike some boom markets that experience rapid price appreciation, North Carolina has maintained relatively steady, sustainable growth patterns that are less likely to experience dramatic reversals. Tennessee, particularly the Nashville and Memphis metropolitan areas, represents another resilient market. The state's combination of no income tax, growing music and entertainment industries, manufacturing presence, and central geographic location creates multiple pillars of economic support. Housing costs remain reasonable compared to many other growing markets, providing a buffer against economic downturns. Georgia, anchored by Atlanta's diverse economy, continues to show resilience indicators. The state serves as a major transportation and logistics hub, has a growing tech sector, and maintains a significant manufacturing presence. Atlanta's international airport and the state's business-friendly environment continue to attract corporate relocations and expansions. Arizona presents an interesting case study in resilience. While the Phoenix market experienced significant volatility in previous cycles, the state has diversified its economy beyond construction and real estate. Growing tech and manufacturing sectors, combined with continued population growth driven by retirees and young professionals, create multiple sources of housing demand. Now let's talk about some states that might be more vulnerable than people realize, because understanding the risks is just as important as identifying opportunities. California faces significant headwinds despite its economic strength. Extreme housing costs, regulatory challenges, and population outmigration to other states create vulnerability. While tech wealth provides some insulation, the disconnect between housing costs and median incomes has reached unsustainable levels in many markets. New York's housing market resilience varies dramatically by region. New York City benefits from international investment and economic diversity, but upstate markets face population decline and economic challenges. High taxes and regulatory burdens create additional pressures during economic downturns. Several Mountain West states that experienced dramatic price appreciation during the pandemic might face corrections. Markets like Boise, Salt Lake City, and Denver saw prices rise so rapidly that they may have overshot sustainable levels, making them vulnerable to significant adjustments. Here's what's really important to understand about market resilience. It's not just about avoiding losses, it's about positioning yourself for long-term success. The most resilient markets often provide the best opportunities for both immediate stability and future growth. If you're considering buying in 2025, focus on markets with strong job growth, reasonable price-to-income ratios, and diverse economic bases. Don't just chase the hottest markets or the cheapest prices, look for fundamentals that support long-term stability. For investors, resilient markets offer the opportunity to acquire quality properties at reasonable prices while avoiding the extreme volatility that can destroy investment returns. These markets typically offer better cash flow opportunities and more predictable appreciation patterns. For sellers, understanding market resilience helps with timing decisions. If you're in a vulnerable market, it might make sense to sell before conditions deteriorate. If you're in a resilient market, you might have more flexibility in your timing. The key insight here is that market resilience isn't just about geography. It's about the underlying economic and demographic fundamentals that drive housing demand. States with diverse economies, growing populations, reasonable affordability, and business-friendly environments are best positioned to weather whatever economic storms lie ahead. As we head into 2025, the housing markets that survive and thrive will be those built on solid foundations rather than speculation and hype. By focusing on these resilient markets, you can protect your wealth while positioning yourself for future opportunities. The next 12 months will reveal which markets have real staying power and which were just riding the wave. Make sure you're positioned in the markets that can handle whatever comes next.